Adam and Ashley here with you. Today we are at the world headquarters of Witmer Wood Tax Consultants. Julie Wood here is the owner and CPA. So, here's my first question for you. If I bought or sold a house this year, do I need to bring you my settlement statement?
Absolutely. Whenever you buy or sell a home, whether it's for a personal residence or for a rental property, your tax preparer is always going to want to see your HUD-1 statement. There may be potential deductions for either a personal residence or rental property on the tax return.
Great. With real estate, when you go to sell, what are other benefits, such as capital gains on the sale of the property?
You know, that is one of the best benefits for home ownership. If you own and occupy your personal residence for 2 out of the 5 preceding years, for married filing joint, you can exclude up to $500,000 of capital gains on that house. $250,000 for married filing single. So that's a huge benefit.
That's a big benefit.
Especially if you have a house that's appreciating in value.
Yeah.
Mm-hmm.
So if I have an investment property, what can I write off?
For a rental property, you're going to want to keep track of all of your expenses. For routine repairs and upkeep, those expenses we write off in the year that you incurred the expense. For larger expenses, example, new roof, new carpeting, those type of expenses we're required to write off over a certain life that the IRS has predetermined.
So great. So those are the items that we can write off in the investment. What about on a current mortgage, a homeowner?
Personal resident?
Personal resident.
Unfortunately, on a personal resident, the only deductions you're allowed to take would be on Schedule A. If you're able to itemize, you would be able to deduct your mortgage interest, and you could also deduct your property taxes. And in the state of Indiana, your property taxes are also a deduction on your state income tax return. Again, you have to be able to itemize, and there are some limitations that apply, but for most people, those are deductions you can get in the current year.
And that's a big benefit versus renting, where you're renting and you're just kind of throwing your money away.
Absolutely. Because rent, even though you can take the rent deduction as well on your Indiana return, you don't get the benefit on your federal.
Great.
We saw a lot of people refinance this year. What can you tell us about refinancing?
Refinance, you'd also want to take in your HUD-1 statement so that the tax preparer could make sure there wasn't any closing costs or any fees that were paid that could be deducted or amortized over the life of the loan.
Perfect.
Great. Is there any other advice you'd like to give to everybody that watches our videos?
Yeah. You know, the other thing I think people should do, if you go out to the Indiana Assessor's Office, it's public knowledge, public information. Go out into the assessor's office and look up your account and make sure that if you do have a mortgage on your home that you are getting your mortgage exemption and you're also getting your homestead exemption. A lot of times I'll look up that information. If a client doesn't give me what their property tax payments were, I can look that up for them. And I also like to make sure that they have those exemptions if they apply, because that can bring down your mortgage payments. So you want to make sure those are in force.
And always consult.
And always consult a professional, Adam.
Adam and Julie from Witmer Wood. We'd like to thank Julie today for helping us out with this video. The question this week is, we're looking for the little girl who helped us out in last week's video's name. So if you know that answer, email it to me at AdamSmith@coldbanker.com or Ashley at aadams@cbrwg.com. And for all the correct answers, we'll go into the drawings for a gift certificate to be given away for 4 correct answers of the month. So remember to like us on Facebook. Thanks, and we'll see you next week.